Well, hello, active traders. This is Ken Calhoun from TradeMastery.com. And in this lesson, I wanted to share with you exactly how to use one triggers the other conditional orders. And the reason to do that is that it automatically puts your stop loss, whether it's a trailing stop or a hard stop, in your brokerage account as soon as you get an order fill. So you don't have to worry about manually exiting a trade ever again. This is a really great way to automate your trades. So let's take a look at this. In the upper left corner, this is the part of my Fidelity Active Trader Pro workstation. This is the order, the conditional one triggers the other order box. And this is how I enter my orders, hundreds a week. So you can see here Snapchat is the ticker, and this is the chart. So let's say we want to play this. Let's say we want to do a buy of, say, I don't know, 300 shares, and we want to use a buy stop order. And again, the reason that you use buy stop orders is you want to wait for it to get above your price before you want to buy it. So let's say we want it to get over, say, 1050. So you type in the 1050, 10.5. And so what this first order does is says, let me buy 300 shares if price gets over 1050. This is Snapchat. So we're not going to buy it yet, but if it gets over the 1050, we'll buy it, and that's great. We'll have the shares. Now, in case, what happens if it goes up and it immediately crashes back down? You don't want to take a big stop loss. You want to keep it really tight. Or let's say it hits your entry and keeps going, and you want to lock in a profit. Well, the way to do that would be with a trailing stop. Let's say we use just say, I often use something like 15 or 20 cents. Let's just round it to 20 cents. So what this tells me is, once I put this in, it shows in your workstation, it'll show an A and a B order. The A order is the entry, and the B order is the exit. Now in this particular chart, what this is going to do is it'll buy it for me if it gets over 1050 and trail a 20-cent stop under the current price. So if it goes from 50 to 70, then the trail stop value is back at 50. So if it goes back down, we're out at break even. If it goes up to the $11 share range, then the 20-cent trailing stop will now be at 1080. So it kind of basically it follows price action up, and then if it comes back down, you automatically get sold at the trailing stop value. It's a very handy technique. The other option is to use a hard stop. And for example, the way that I do that is I use a combination of both depending on the specific setup and time of day and type of chart. But let's say we want to play really tight. Let's say we want to buy 1050, but we want to take a stop loss if it gets down to just say 1040. Now the thing is, it's got to be a value that's under the current inside bid, or else the workstation won't take it. So 1040 will work on right now. So $10.4. So what this order, now if I click preview and then the word place, which will be the next button, it will automatically put that order in my brokerage account. So that way it'll buy shares for me at 1050, and the maximum stop loss will only be 10 cents at the 1040. Now the challenge with this approach is you've got to kind of manually trail the stop on it, because if it runs up, let's say it runs from here up to say 11 and it starts to come back down, well, since your hard stop is at 1040, it won't sell for you at a profit up there. You've got to manually tighten up that trailing stop. And so if you want to do it on autopilot, use trailing stops. If you want to do it manually, use hard stop. And this is a hard stop at 10.4. So for example, let's say this gets to just over 1050 and I automatically get the order fill. So I get those 300 shares are bought. So I'm long 300 shares up there at 1050, and now it runs up to say 1080, and then it's up right near 11. Well, then I will change the stop value from 1040. You can do that, which is great in the workstation. You can change it from the 10.4 up to like 1070 or 1080. So that way you can manually tighten in the trailing stop. So two different approaches, but they all use the same exact order interface. It's called one triggers the other, OTO, conditional orders. And most brokerages have them. So whether you're using Fidelity or a different broker, take a look at OTO orders. It's how to automate your trailing. Automate your trading, such as using either trailing or hard stop. So hope that helps. And that's a very effective technique, because it also helps if you wanted to day trade without having to be in front of monitors all day. Or let's say you just want to trade the very open, but you still want to have some orders in play for the middle of the day or the late part of the day, late after or early afternoon, but you don't want to be sitting in front of the monitors all day. This is how to do it with one triggers the other order. So that way, once you get an order fill, your stop is automatically set. And if it runs, great. And if it doesn't, you take a small stop. So it automates your process. Anyway, do check out my live room at trademastery.com. I'll see you in the room. Take care and best wishes. Bye for now.